Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. 2025 is underway, and just off the bat, we have seen a strong surge in dollar strength. The single currency euro, which has struggled quite a bit against the dollar in 2024, hit levels seen only in 2022, while the Asian pack, though not trending, trades close to the cycle lows against the greenback. Interestingly, Chinese bond yields have been constantly falling. The two-year yields at 1.08%, with many in the market speculating that it may go even below 1%. Good morning, JK. Seems to be a trending start to 2025. What's your thought?
Good morning, Swaraj. Yes, as we shared yesterday, the themes of last year have been carried over into 2025, and that's what we have seen in the dollar index, uh, uh, you know, making new highs, and then the euro coming off. Of course, we did, see good data from US. That was a trigger for the dollar index to break key level at 109, and also on the euro to break 1.03, which was holding for quite some time. And the economic news was that the weekly jobless claims dropped to 211,000 from 219,000. And continued claims also fell quite a bit to 1.84 million from 1.91 million previous. And this was one of the negative that was being observed by the market. Apart from that, manufacturing PMI final reading as per S&P Global improved to 49.4 from the initial reading of 48.3. So the market, which is already biased for a strong dollar, was got the boost for further pushing it up, and the yields were also pushed up across the tenor from 10 to 30 years, as well as even the 2 year also. And we have, of course, the Treasury coming out with a lot of issuances next week in the 3 year, 10 year, and 30 year tenor, as much as 119 billion. So the yields are very limited scope on the downside, and that actually gives a lot of support to the dollar. And that's the path of least resistance is higher side for the dollar. That's what we saw yesterday. Of course, I would say overall dollar performance was kind of mixed. We could see the dollar gaining against the euro, GBP, and the yen, while against the Chinese yuan, it fell short of the previous high of 7.37 that was seen last week. And the dollar also lost the gains that it made initially against other EM currencies, particularly on the Latin American currencies. And today morning, we see that the Asian currencies have not weakened as much as the other major currencies as well. And a lot of things are happening in China. You mentioned about the Chinese yields falling. In fact, a lot of things are happening in the Chinese economy. To start with, the Chinese regulator has announced that they are lowering the dollar's weightage, rather the yuan's weightage for dollar and the euro in their basket by over 1% this year, which means that we will see lesser volatility in the yuan relative to these two major currencies. As I said, the bond yields have been hitting new all-time lows. The 10-year and the 30-year have fallen more than 1%, full percentage point from 1 year ago, and 2 year, which is more sensitive to the policy changes, is more than 1.25% lower. And China has announced that they will continue to ease policy in 2025. Some of the analysts have actually upgraded China GDP growth in 2025 to 5% from 4.8%. Now, coming more specifically to the Chinese yuan itself, uh, despite the market trying to fend off the central bank efforts, so uh, the central bank has been fixing the yuan, quite steady. I would say strong. Today's fixing, for example, was 2% below where the market was trading. It was at 7.1879, compared to the market trading at 7.34. So this is a feature that we have observed for quite some time. Just to give you a perspective, from 2008 onwards, Chinese onshore yuan has never traded above 7.37, 7.36 rather, and the Chinese fixing has never been above 7.26. So you know that the dollar index itself from the low of 73 or 72 in 2008 has risen more than 30% to trade at near 110, even 114 was seen. So, the Chinese have actually managed to keep their currency quite stable. If there is any breakout to the upside due to policy measures from the new Trump administration, that will definitely have huge implications for Asia and the global currencies, and also particularly the INR itself. So this is something that we need to keep about the Chinese market. A lot of things happening, and of course, as far as the rupee, we had another new closing low against the USD yesterday, although intraday trade was just under the previous high of 85.80, thanks to renewed intervention from central bank and some positive inflow from FIS for a change of about 1,500 crores, even as the stock markets had a good run yesterday of gaining more than 1%. It is of course difficult to agree with the policy of our central bank to stop rupee from depreciating in line with other currencies, and based on and particularly when it is based on strong demand, and more so when our reserves are depleting, and poorly performing export sector would definitely benefit from weaker currencies. However, if it is intended only as a smoothing operation, we should see them let the market have its go, eventually, unless it becomes too volatile or disruptive. For today, of course, I think because Asian currencies are steady, including yuan, I don't see, at least for now, rupee making a new low, significantly. So just about 85, 80. Market itself may be a bit cautious because we have seen big intervention from central bank twice. So all in all, we are going to see a steady market today. But next week becomes a bit more active with a lot of macro data from Europe on inflation and growth. And then, of course, US host of labor market data culminating with the non-farm payroll data on Friday. So, and market will come back to full strength and the liquidity from Monday onwards. So we should see, a much better, directional movement in the coming days, or rather in the coming weeks. Thank you.
Thank you, Jack. And just quickly summarizing the dollar strength as we are seeing, because dollar index is making new cycle highs. Now, the data from the US, which triggered the dollar index to break 109, the weekly jobless claims dropped to 211,000, and even the continuing claims dropped as well. So this is significant because continuing claims were rising constantly previously. So dropping is good news for the labor market, but of course it means the Fed has a challenge at its hand because the labor market somewhat remains resilient. Even the manufacturing PMI from the US improved to 49.40. So all of this gave market further incentive to push up the dollar and the yields. And also, one more factor to keep in mind is that Treasury issuances next week to the tune of $119 billion, which keeps the downside limited for the US yields. For the rupee, we made another low on a closing basis, but it remained well within the all-time lows. And FII inflows to the tune of 1,500 crores helped rupee curb further depreciation. That's it from us today. Thanks for listening. Have a very good weekend, and we'll see you all on Monday with a fresh round of updates.